The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. And glad to be back. I was out for a little bit celebrating my wife and I's 11-year anniversary. And so glad to be back on the show. We had a good time. And let's check out where the markets are at right now. We got the S&P is down 1.5. Russell is currently up a few ticks there, up about a point. We have the Nasdaq up 9 points, and Dow is down 15. But we've had some nice clean movement this morning, and providing some solid trades and some good opportunities. Just got to go in there and take your profits as it's oscillating along, but overall working very well. Also looking in a little deeper, what we got over here on our metals markets, we got copper right now is pretty flat, up about 0.5%. We got gold up 30%. We got silver up almost 0.5%. Natural gas having some nice movements, up 2% right now on the day. Looking on over at corn. Corn is currently up 2.5 points, and we got soybeans down 3. Pound dollar right now is down, 0.55%. Euro dollar is currently down, so pound dollar makes that down 82 pips. We got the euro dollar down 21. U.S. franc is down 83. Dollar yen's pretty flat on the day, just down a few pips. We got euro yen down 50 pips. Euro pound is up 21. So euro gaining against the pound, but losing against most of the other currency pairs. We got the Aussie yen right now is currently down 16. Aussie dollar is down 8, pretty flat on the day. We got bonds moving into positive territory, up over 0.5%, working really well. We got dollar index, pretty flat on the day at the moment. Looking on over at our pound yen. Pound yen is down 0.5%. We got euro franc is down 1.3. Looking on over at the pound franc, it's down 1.52, and the dollar CAD is down 14 pips. But pound franc, another 220 pip move on pound franc. Check that out. Just had to back up and look at that and see that. Some nice big moves. And then looking on over at oil right now, let's see, make sure we're on I think we're in K5, yeah. So oil right now, K5, just pretty flat on the day, down 11 cents, but had some decent little moves in the process that you could grab. Some scalps and a couple trends. And I wanted to look at, dollar franc, pound dollar, pound franc, so that makes sense. So, you look over at pound dollars, 82 pips, pound francs, 83 pips. So both of those really being the most volatile pairs on the day. Euro dollar not having that much. So euro franc actually got a lot, but it got it from the franc movement, and then pound franc having those two high volatility pairs. Pound franc, massive move. And, you can always make synthetics. You can trade like pound dollar spreads and dollar franc spreads. If you buy the pound dollar and you buy the dollar franc spread, that's like buying a pound franc spread. So there's a lot of different ways that you can trade on Nadex, mix things up to get some of those high volatility pairs that you might want to get that are a little bit more unique, not the the majors, but the minor FX pairs. What do we got going on? We got stock market updates here. We got the crude. Let's really stock market. The crude oil has lost a lot of its gains as the dollar index has been rising up. So we're seeing CL down right now and a dollar index positive, rallying off today's lows there. Euro dollar continuing that drop down. It actually intraday dropped below 1.0900. So continue that move, and we're moving towards putting it on parity. So we'll see. Gold declines, but they keep printing. It's going to keep going. Gold declines on strong U.S. data. So gold moving down a little bit, but it looks like it regained some of that and moved back in to positive territory. New home sales hit a 7-year high in February. So the new home sales report that came out this morning, we had a 7-year high. So apparently there were enough new buyers to meet demand. The U.S. manufacturing PMI hit a 5-year month high that just came out. So again, that just topped in and 5-month high. So that's positive news. We've seen some a little bit of a positive move in the markets. At least this morning, there was some to take advantage of. They're starting to pull back a little bit now. So apparently, DAX is the most overbought. Let's see, according to this article, let me see this one right now. Most overbought it's been since the peak in 2000. Let me find that article. We'll look at it. And so let's see. The German DAX stock market index has only been this extended relative to its 200-day moving average once in history, March 2000, and that did not end well. So, note there. Thank you, Mr. Draghi. But anyway, so check that out. DAX index moving on up, and you can trade the DAX on Nadex as well. And but a big extension over the 200-day moving average. That might be something we might want to go in and look at. Let's see. Let's pull up. Let's see. TOS doesn't have that. We're gonna have to go in and open that up over on Ninja Trader. So we may come back and look at that a little bit later in the show. But obviously, all you got to do is open a 200 or open a daily chart, okay, and add a simple moving average and make its length 200. That's the most industrial, that's the standard long-term moving average. And basically what they're showing is how far has the price extended, okay, on a percentage basis point there, how far has it extended from the 200 period moving average. So we saw it there, and you can see what happened back in 2000 when it had that massive extension. And there was obviously a very big pullback, like a massively insane pullback on the DAX index over the next few years. This wasn't like a day, okay? And let's see if I'll zoom in on that a little bit more for you. So right here, if we go in and you can look at, okay, so it's basically hit the largest extension it's had since back in 2000. Now, that doesn't mean it couldn't keep going up and meet that same extension. It hasn't hit what it hit back in 2000, which was over 1.3. All right, so it went on up, but when it started pulling back, notice basically it dropped all the way from, 99, I don't know, we'll just say 9,900. Do I get a simple number? Sorry, 90, not even that high. Let's see, 8,000. Okay, so it went from 8,000 and moved on down to, it looks like just above 2,000, so a 6,000 point drop. Between 2000 and 2003 after it had extended that far. So, keep your eye out on it. This is more of a long-term trader outlook, but it also might be a good sign for those of us who love volatility. Okay? So, if you're looking for volatility, this is a good sign that volatility may be coming, because when we get those down markets, that's when you really get those moves. These up markets that are slow or just, they're sort of painful. You go in, you make some money, you lose some money, make some money. And they can be a little bit more painful. And we've done well. I've done well over the past, several months here. Obviously, it was even better when we had the volatility. Now it's a little slower. But, still, pulling the money out. But what I want to, obviously, you can make so much more when you got that volatility. So I'm looking forward to it. I'm hoping we get a lot more. Let's see here. If I go in and pull up a simple chart for you, and I just want to look at the VIX, and I like to go in and pull this up and just sort of do a analysis on the VIX and see where we're at. VIX is obviously pretty low right now. To get a idea on that, put it on here to really get the idea. There's a couple ways to do it, but simple moving average. You can go in and put 100 moving average on there, and give you sort of the idea of what's high and what's low. You can even go in, if you want to go all the way back, you can do the classic 200-day moving average, which is, like I said, sort of that industry standard moving average, and that really sort of flatlines it for you. Okay. And so what's high, what's low volatility? This is a very simple way to define high and low volatility. Put a 200 period moving average on the IV, which is the VIX is the CBOE's market volatility index for the SPX index options, okay, which is the S&P 500. It's not the one for the futures options, but it's one for the SPX index options. And they basically combine 4 different options and put them together and make an average to come up with their IV number. But anyway, so you go right in here and you look at it, you can sort of see, when is it going up, when is it going down. Obviously, we're going down right now. Implied volatility is going down right now. That makes things a little more challenging to trade. It's really easy to trade when it's up here. Okay, I mean, if you got anything that can follow a trend at all, very easy to trade when the market's up. When the market's down like this, then you really start going into more of a chop zone, which means, you want to look at scalping. You want to look at range-bound trading. Neutral trading strategies, things like that. You may not want to be going for killer trends when the VIX drops. Now, there's a lot more than the VIX out there. There's a lot of volatility indices. A lot of people don't know about this. Let's go over here. Let's look this up. So we got CBOE volatility indices, and they ought to have their own little page. It talks all about it. It's VIX volatility. There we go. If you go down here, you can find out the different ones, and this is really a helpful thing. So hopefully, I did cboe.com. It's /micro/volatility/introduction. It looks like if you go to CBOE and you go to products, okay, click on their products page, and VIX index and volatility, click on that. And then right here, you see volatility indices, okay? So just sort of trying to show you how to get there. So products, VIX index and volatility, VIX index and volatility, and then volatility indices. Scroll on, you can see what volatility indices exist. Okay. And let's see, what do they have right here on this PDF? They got new ones or not listed. So it looks like, there's quite a few listed on there too. It looks like there may even be more. But there's a nice little PDF file where you can download them. But just to show you some of the things that are available, like I said, that a lot of people don't even know about. You got the VIX. Everybody knows about the VIX. But what if you trade NASDAQ? Well, there's the VXN. Okay. What if you trade the Dow? You got the VXD. What if you trade Russell? You have the RVX. Okay. What if you trade oil? You got the OVX. What if you trade gold? You got the GVZ. All right. So, you're an oil trader. What's oil look like? So we go back over here and let's look at OVX. Got some volatility. Okay. Now, volatility has went so high on the crude oil volatility index. Would you agree? I mean, it just exploded. That you may want to go in and make a smaller. So I want to bring this out when it just blows past it. And let me put these like side by side. I'll do it when we get back. And we'll pull up the volatility indices. We'll look at them and talk about how you can use them. Because, we got these on stocks. And we have them on ETFs. And we have them on treasuries. And we have them on indices. So we'll talk about it when we get back. Stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. Your host, Darrell Martin. Feel free to call in with any questions you got. And I want to go over volatility indices specifically and how they can help you in your trading. So first step, just so you can find out what the volatilities are, volatility indices, hop on over to cboe.com, okay? And then click on products. From there, I want you to go ahead and click on the VIX index and volatility. Once you've covered that, then you can go in and click on the volatility indices. This is what we're focusing on specifically right here. Now, there's a lot of different ones that we can look at. This is one that we're going to focus on right now. But we can also go volatility on stock indices, on individual equities, on ETFs, on interest rates, on currencies, okay? Of course, there's volatility indicators, and, there's a lot of stuff on here. This is a great area for you to go to and check out and hopefully pick a few things up from. All right. So on the stock indices, they're going to focus a little bit more on what stocks are available on right there. And then over here, you'll see the equities that they're available on. And if I go in and look at the page I opened that have the ETFs, what ETFs are they available on? And then we got the interest rates. And then we also have the, CBOE press release volatility indice, value and FX options. There's a lot of cool stuff to think about on this. Is going in and looking at the press release volatility. On the press release, they added the volatility indices for the FX, and that's like massive to have that, because they used to just have it on the basket of currencies. All right, and so this year they added ones just for like euro, dollar, yen, pound, things like that. So I'm excited about that to start digging more and more into it. And then you just got your volatility indicators, like the VIX of the VIX indicators. You have the correlation, S&P 500 implied correlation index to various things. You got near-term VIX index. You got VIX indicative bid index. You got indicative ask index. So there's a lot of cool things that you could definitely dig into and see on here. And this will show you what the index is, and we can go into a lot of different lessons on volatility. Today, I want to stick to a pretty simple lesson, and for this segment. And what I wanted to really focus on with you was just, knowing what they are, where to find them, and then some basic ways they can help you in your trading. So now that you know where to find these volatility indices, and they, list them all right there on the volatility indices page, you can scroll down and see all of them. Okay. It's pretty cool. They give you a little snapshot and everything of where it's at, but you can also open them like in Thinkorswim. If you have an end-of-day data feed, like with Kinetic, you can open them in NinjaTrader. That's a free end-of-day feed. Be able to pull them up from there. And or TradeStation, of course, eSignal. If you have a subscription to the volatility indices, you can add them in there. So there's a lot of different ways that, you can put them in whatever platform it is that you use, as long as they have an access to the CBOE volatility indices. That being said, let's just take one that everybody's familiar with, the VIX, okay? And before I dive into it, I just want to let you know they got ones for NASDAQ, they got them for the Dow, they got them for the Russell, they have short-term, ones as well that you may use more if you're into futures trading, okay? They have ones going in and looking at emerging markets, China ETFs. Brazilian ETFs. They got the 10-year Treasury notes. They have the swap indexes. If you're trading crude oil, gold, silver, they got that. If you're trading that gold miners ETF, or energy sector ETF, they got one for that. If you go over and look at currency related, they have the Euro FX, the Yen FX, British Pound FX. Now they're looking at ETFs on these. And then if you go in, you look at Amazon, Apple, Goldman Sachs, Google, IBM. So I know a lot of you traders out there love to trade Apple. Okay, there is one of these for Apple. Okay, and they got the VIX of the VIX, the VVIX. All right. So what's the volatility of the implied volatility? That can make it really confusing. Anyways, implied volatility summary is just the expected movement built into the price of an option. So one way I've heard it said by a trader is it's like the air in a tire. Like more air, it pumps up the price of an option. Okay, let the air out, tire goes down. So options get more expensive and less expensive based on expected movement. Car insurance gets more expensive if you got a 16-year-old, boy driving the car versus if you have a, 50-year-old man that has no record of tickets or wrecks or anything. Okay. If you're in the city, it may cost more than you live out in the country, etc. So more volatility means options are more expensive and means more movement is expected. We're going to dive into how to apply this to your chart, how to look at it to help you trade when we get back on the next segment. So stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All righty, folks, going back here to the Diagnostic Trading Hour. And going through, we're talking about the VIX options. And we're talking about other options, the VIX indices and the other volatility indices that you can use in order to help you sort of know what club to pull out of the bag is an analogy I like to use on this because, basically, when you go, like, let's say you're playing golf and, you're probably not going to use a driver. When you're going to putt, not going to use a putter when you're driving, right? So, you're going to, there's irons on the grass, you use sand wedge in the sand, things like that. So, which club do you pull out of the bag? And this is what I use to help me better identify what club to pull out of the bag. If I want to go for scalp trading, do I want to go for trend trading? Do I want to go for larger moves or smaller moves? Do I want to try to hop in a little bit earlier because the volatility is so low, it's probably most likely a range-bound market. I can get in a little earlier than I normally would. But there's more volatility. I don't need to get in early. I need to let it prove itself a little bit more, okay? So, if I'm doing, say, binary options, hey, cool. I'll do out of the monies if it's low volatility. They'll be cheap, and I'll look for close, very close ones. I want volume, but even with volume, it works well if you got that, high volume, then I'll look at that. My wife, she just entered, wanted to give her props. Just got in this contest right here, and it's basically just a demo trading contest. She's done really well trading live. She wanted to, go in and get in this contest, sort of prove it on a second account, and started with 25 grand. Couldn't trade with more than 15 contracts. Could not add on a contract. So it was literally like after you had bought 15, unless you closed that 15, you couldn't buy another 15. So it capped it out. Made it a lot more fair versus the, going in just unlimited 15 entry orders type thing. And But yeah, she did well. She made 18 grand in 1 week. So mainly focusing on out of the money binaries on Nadex. So pretty cool. And I just want to give her props on that. But we were looking at implied volatility. It's low, it's cheap. She's going to focus on that. Okay. So going over, looking at the VIX and the volatility indices, like I said, we got a lot of different ones. So let's just pull up a VIX chart right here. And on this chart, what we got is I have basically a red, orange, and a green line. They aren't magical, okay? The red line is a 200-period moving average. The orange line is a 100. The green is a 50. So I just basically use the colors to help me differentiate fast and slow. Okay, so slow is the red one, fast is the green one. The one in the middle is orange. The most standard one I like to use on this is the 200-period moving average. So what I do is I pull up like the VIX. And if it's, above the VIX, we got higher volatility. If it's below this 200-period moving average on the VIX, we got lower implied volatility. Okay? And obviously, the higher it is above it, the more implied volatility we got. The lower it is below it, the lower implied volatility we got. All right? And we're pretty much pushing on some pretty big lows down here at the moment. It doesn't matter whether you're looking at the 50, the 100, or the 200. It's way below all three. Okay? So when I see it bumping up, I'm, going to change up. I'm going to start looking for, larger trending moves and things like that. There's going to be a lot of premium. I can take advantage of far deep in the money, high priced in the money options versus way out of the money, expensive options. So different strategies allow me to go, okay, do I want to do in the monies or out of the monies? Do I want to do trends on my futures trading and forex trade? Do I want to use scalping more? Do I expect ranging markets or do I expect trending markets? Doesn't mean there won't be ranging markets inside the big up moves, and it won't mean there won't be trending days during the little moves. But what it does do is it tells me very simply, okay, what I should expect the majority of the time. And so what do I want to, sort of look to do consistently? Starts moving up. Hey, we're throwing a lot of money away with scalps. But if it goes way, if it's way up there, like I should be going for trends. But if it goes way down here, we're probably gonna get chopped up more going for trends. Now, we mentioned there's more than one of these. Okay, it's not just on the VIX. Like you could use on the spiders, you could use on the S&P 500, SPX, and there are more than I'm going into. But just this is a general overview to get you the idea. Because once you got the idea, and you know where to go to find them, then you can put the pieces together. Okay, oil. I know we got a lot of oil traders on there. We go pull out OVX. Okay, so go over here. So OVX, and we see that obviously it's very, very high. Okay, it's starting to drop below the 50 and the 100-period moving average right now. So it's probably not as volatile as it was when it was above all three. Okay, so I really like that when it's above all three, below all three. To me, that's a clear definition. So I just said that. Okay, well, let's go back and let's look at the VIX again with that above all three and below all three. So we go over here. It's below all three lines. It's starting to move back up in. It's a little less known. It's above all three. Cool. It's below all three, above all three, below all three. Very simple. Like this zone right here is a little bit like, oh, what's going on? Higher low volatility. Okay. So back on over to OVX. So we're still above. But we are obviously coming down. Volatility is dropping. We haven't the volatility we had there at the last part of last year, first part of this year. It's starting to come down a little bit. It popped up. Hey, that was great. Came back down. So just remember that you're looking for that. Very simple. Now go in and let's look at something gold. Got a lot of gold traders out there, right? So got gold TD ETF. Basically for the GLD is what it's based on, but I mean it's gonna be very similar implied volatility between like GC and the ETF. I mean there is differences, but there's similarities. So again, below it, above it, okay, chopping around in here. A little less defined. We just dropped below it, looking for lower volatility on it. Okay, so that's looking for gold. Just a really simple lesson, but hopefully it's something that will help you out. Let's see. They got the silver one. Let's see. I don't know if all these are going to match up with Thinkorswim, but we'll see. There we go. Great. So the VIX on the silver. So we see the same thing going on just now, starting to push right here on the bottom on the silver index. Gold miners index. I know there's some gold miner traders out there. So gold miners index. We're sort of seeing the same thing there across the IV across the board. So it gives you a nice little heads up. Hey, expect premium should be cheaper. don't be looking to sell premium so much, okay? And, look at, is it above or below those zones? And I mean, you can see trends, you can see a lot of things with it. You can get real technical on it. I'm just letting you know, I don't spend a whole lot of time overanalyzing the volatility indice. I look at it, I'm like, oh, I have to shoot it far because it's way above all three. So I'm looking for trends. Or, oh, we're down here, we're on the green. I need to pull out the putter. And like, that's it. I'm not going to sit here and analyze VIX and all that all day. You can do that. You can put 1,000 indicators on it. You can, whatever you want to do. But I'm just put a few moving averages on there. Make it simple. Is it high? Is it low? Is it clear? Cool. All right. Now I know what I want to do with my trading day. I just want something objective outside of me, and that doesn't have a whole lot of stuff on it to make it confusing. So that way I can't trip my own self up. All right. The energy sector ETF. I mean, we're seeing this go across the board. A lot of volatility coming down. So that volatility coming down now, we know it can always explode, but we've had this big expansion. We're seeing a massive contraction. You can see in all of these energy and metal ETFs that we're looking at. Okay. Now, I haven't even played with these, so it's going to be sort of cool. You got now the EU VIX, the Euro Dollar Volatility Index VIX. And we don't have enough days yet to even get those moving averages. That makes sense because I just opened them up in January. So it's hard to pull off a 200-period moving average, right? So let me go to a couple other examples. I'll come back to them and show some ideas on what we can do on that. All right, let's go in and look at I'll probably just go to a smaller time frame. But let's look at Amazon real quick. I know we got some Amazon traders. R1, VX, AZN. Okay, so now you can see the Amazon index. All right, so when you might want to be doing premium options right up here, right? Looking for trending moves. And I know we got some Apple traders. And a lot of those listening here on TFNN. And so here you go. It sort of lets you know options cheap, options expensive, what direction are they going, things like that. So we've seen actually a little uptick in applied volatility. So the options got a little bit more expensive. They have been pretty cheap relative to the past since November. They're pretty much at they were at a low like yesterday or a couple days ago, last Friday, relative to November. They're starting to tick on back up. Now, if you pull this up and you look over at the Apple chart and you put them side by side on top of each other, you're going to see that this will go up as we're approaching earnings. It'll drop after earnings comes out or after major news announcements on Apple. Google is the other one. They've added, they got Google on there. They've had that one, I think, for a while. So if you're a Google trader, I know there's even more Apple traders now that they, did all that split stuff and everything. But there's Google right there for you. So you can sort of see just the combo there. Now let's go ahead and I want to go back and I want to look at these because I literally just started diving into them. And because they're so new, it doesn't really matter to look at them on the first day when they come out because there's no data. But let's see if we can plot these out maybe on like 4-hour bars. Yeah, that's going to be not enough. Let's go out to... Let's go 1-hour bars. Let's give us an idea. Let's get those 200-period moving averages, right? So, and let's see here. We'll go in. Well, this will give us the idea on, at least now this is on an hourly time frame, which is sort of cool. But probably like a little bit more. But at least on an hourly time frame, you can see for that day when it's opening up, where is it at? And right now, we've seen that, euro dollar has been very high, very high, very high. We go down here, starting to move down, starting to drop below that 50, came below that 100, maybe be heading towards this lower end down here. Hour still seems a little too small to me. So let's go in and let's enter day. Let's give me the year, and I want to try that 4-hour one. That won't work. So let's go into 2-hour, okay? And the only reason I'm having to do this is because it literally just started trading. So to get 200 periods, there we go. So we just now got into like our 200th second hour on this for the live market hours. So you see it just started, I got 50, then we got 100, now we got 200. So now we can start getting an idea of, out of all the, how this is being tracked, where are we at? And so right now we got volatility, like obviously it was very low, shot up, and this is just recent volatility. It's still intraday because we're on 2 hours. I can't wait till we get this to daily because it really lets us see how the day plays out. Okay, but over the coming, it'll take basically 200 days Okay, this thing being open a year of this thing being open to have a full 200-day moving average, but as each, as time passes, we'll be able to move it to 4 hour and then, 8 hour, and then eventually, I guess getting rid of 8 hour because they're only open for 8 hours, but 4 hour, then eventually daily. So here in a few months, we got to be able to do 4 hours, and then about a year, we'll be able to do 8 hour, actually have the entire thing plotting. But this will always give you an idea relative to, recent days past 200 period moving average. What are we looking at right now? We're still in high volatility, so options are a little bit more. And let's go look at the other ones. Like I said, these are new to pretty much everybody. Okay, so JY VIX. So JY VIX, it's low. So implied volatility is very low on the yen right now, comparatively. And it's been really high. We all know it's been high, but for as of the last few days, we've actually been below all the periods. Okay, if we go in and look at the pound, so we got that BP VIX. All right, and so that's on up there, and we can see that's way up. And so pound has the most implied volatility. So if you're wanting high IV, what we got? We just looked at them. Which one would you choose? You'd probably want the pound. It has more IV right now than the yen or the euro. Okay, and that's going to change. So what currency pair should I trade? Well, do you want volatility? Yeah, I want volatile. Okay, this is a way to go find out. Okay, and don't just look at it every day. So that way you can sort of see. I want high volatility. I don't care what the name of the instrument is. Boom, here you go. All right. They got the Euro currency ETF. So as well, that's the EVZ. Now that one they've had around longer. Okay, and we can back that out to daily, and actually see that. The issue on that one is it's like I want to say it's a basket. Euro currency, it's the euro exchange rate by applying the VIX method on the currency shares Euro Trust. So without diving into it, but you can look into EVZ more. That shows IV being high on the Euro currency volatility index if you're trading that ETF, that specific ETF. Okay. And the ETF is, let's see which one, the currency trust, FXC. So FXC would be the one that it goes with. So if we go down and let's put FXE on here, then put it on a daily chart, and we see that it's declining. And notice as it's declining, what happens? Okay, volatility is going up. All right. So markets down, usually you see IV go up. Markets up, you see IV go down. So as the FXE trust is declining rapidly, losing like 30% here over the last 6 months, see that implied volatility going higher. It's starting to regain a little bit, and so it's starting to drop a little bit. But still, it's in that high IV category relative to where it was at 4 versus 14. Massive difference in option pricing. All right, stay right there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so one of the things I mentioned was like looking at Apple. You'll notice that implied volatility usually goes up before announcements happen. So just to see, some of the earnings calls coming in over here and the announcements that they're going to be doing. So we can click on these little icons right here, and they're basically their earnings announcements. And you'll see IV leading up, going in. Usually about 30 days before that, you'll see it start heading up. Earnings call happens, boom, IV drops. Okay, because the big surprise is over. And so we go again. What happens before this one? Implied volatility goes up, and then boom, drops, because a volatility crush is the actual term for it. Okay, so we go over here, and we got another one. What happens right before it? Do you see a pattern? Do you think this might help you? Okay, implied volatility going up. Options get more and more and more expensive, and then it drops. Okay, so very simple pattern to find. Okay, before earnings date, about 30 days before, expect implied volatility to gradually increase. So if you were wanting to buy options, you would not want to buy them like the day before the volatility crush. You would get crushed. Okay, so you may want to buy them like with 60 days to go, 30 days back type thing, and look at that. And then it pops up. You're probably gonna make more on IV than you are on movement anyway, just because the IV is going to go higher. Okay, so understanding these concepts is really, really helpful. This is simple strategy. It's one of the things I used to actually quit my day job and day trade. I was going in and I was using the implied volatility crushes or expansions before earnings in order to, put on trades. So on stocks, but I would focus on the options and I'd use that IV benefit. So just looking at this, you can see not only the IV for Apple, but you can also see, as the earnings is coming up and what pattern you can use to take advantage of that. So it's a quick, simple lesson, but it's one that is super, super helpful. And if you learn it, it'll help you also in understanding if you are trading options on those stocks, when is implied volatility going to be more expensive? And when is it going to drop dramatically? If you don't know this, what I'm teaching you right now, and you trade stocks, you're at a huge disadvantage. Okay, like you're at a massive disadvantage because you're a step behind. You may be buying the most expensive ones, and you may be selling the cheapest ones. So you really, really want to learn about this pattern, especially if you're a stock trader. Okay, so definitely, rewatch this if you haven't got it already. But it's pretty simple, and you can watch IV on a lot of different stocks. There's a lot of different ways to get it. But I like these volatility indices because they really smooth it out versus being so much just basic IV. You get a little smoother IV number to read on. So, like I said, they got them on Goldman, they got them on Amazon, they got them on Google, IBM, but just some big names there. You got Apple. If we go on in and like I said, we got the new ETF, so we can look at, let's just look at euro dollar for a second. And let's go over here and let's pull up this VXXLE. Now this is, EVZ. Where is it at? EVZ. There we go. EVZ. Pull that one up. And you can see as the euro dollar has been making its massive descent, we got a very clear indication of what? Increased implied volatility. So let me flip these around so we have the indicators in the right place. There we go. EVZ, Euro USD. There we go. That's a little cleaner. And all right. So, euro dollar sort of just moving along. It's dropping a little bit. It's lost like 500 pips over a few months. And eventually we get to a certain point where their implied volatility on their options has went way up. And see how it just flies from there. And we'll see this even more with the new Euro-specific one. Hope you learned a lot today. And just a couple quick things hopefully you can use in your trading. Y'all have a great day. I'll see you Thursday on the Diagnostic Trading Hour.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.